On Wall Street, the Trump rally took a breather. Stocks pulled back today, dragged down by the healthcare sector. The Dow Jones Industrial Average fell 35 points to 18,867. The Nasdaq was off 12, despite hitting an intraday high during the trading session. The S&P 500 was down 5. And the small-cap Russell 2000 index continued its hot streak, sitting at a record with 11 straight days of gains. For the week, which saw the Dow hit an all-time high, the major indexes were up, continuing a trend that we've seen since the election. But as Bob Pisani reports, some are starting to express concerns that the market may have come too far, too fast.
The major indices are right near new highs, and that's great news for the bulls, but it could be a cause for concern. So three key factors are moving the markets. First, the economy's getting stronger. We saw a healthy dose of jobs, housing, retail, and CPI data this week. All of it pretty good. GDP is on pace to post its strongest quarterly reading in nearly 2 years. Second, there's an assumption Trump's victory will mean more spending, more stimulus, reduced regulations, and lower taxes. Finally, the Fed speak has been more upbeat recently, with many officials insisting a rate hike could be coming soon. Now, normally that would be bad news, but the talk of more growth is convincing everyone the markets could handle higher rates without freaking out. Okay, what could go wrong? Well, first, the market is completely ignoring the dark side of the Trump rhetoric around trade. A trade war, particularly with China, would be very damaging to both countries and to the stock market. But the biggest risk is that Trump won't deliver to the extent the markets are really pricing in, that the stimulus will not be as big as people think it will be, that the tax cuts won't be as great as people think will be, and the regulatory reform will take much longer than expected. Now, for the moment, the markets like the better economic numbers and the hopes for higher growth. But if the market's euphoria can't be justified, one analyst says it could be a head fake of historic proportions. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.